Hi guys, welcome to a new episode of your IGCSE Tutors. Today I'm going to discuss this Cambridge IGCSE Accounting Paper 1. Question 1. What is the purpose of measuring business profit and loss? Okay, first one, to check the productivity of employees? No. Second, to consider the ability of business to grow? Okay, maybe. To determine how much cash is available? No. To ensure that inventory is not overstated? No. So because they're asking the purpose, we say B is correct because the business profit and loss, the statement of profit or loss, which is the income statement, can help in business decision making. Okay. So B is the answer. Okay. Question 2. At the end of her first year of trading, Zoe had $6,500 in her business bank account. Then she paid $5,000 of her own money into the business bank account. She used $2,000 of this amount to repay a business loan. What effect would these transactions have on her assets, capital, and liabilities? So for this one, it's best that you can use the asset equals to capital plus liability equation. So just write here. Okay, so this is the equation that we use. Okay, so because this question is asking you the effect, so you don't have to care about like the initial starting capital. Okay, so this is not relevant because we just want to see what's the effect, so the changes in the capital. Okay, so first one, she paid 5,000 of her own money into the business bank account. So this one we immediately know it's capital, so we just add 5,000 in the capital. But because this is a dual effect, when you increase 5,000, your asset will also increase 5,000 due to the duality concept. Okay, she used 2,000 of this amount to repay a business loan. So to repay, this is a trick. It's not increase in liability. Repay, it's reduced liability. So you need to reduce by 2,000 and your asset will reduce by 2,000. Okay, and then you can draw a line and then you see what's the changes. So the overall effect is plus 3,000 and this one, the overall effects is like that. So you can see the C plus L side, it's also positive 3,000. Okay, so let's see which one is correct. B is the correct answer. Question 3. Which business document is used by a trader to record the amounts deposited into the bank account? Okay, so it's you can look at the description beside. So this is the definition of each business document. Let's see the first one. Bank statement is the details of bank's transactions received from the bank. So it's issued by the bank to the business. So no, it's not this answer. B. Check counterfoil. It contains information related to checks issued by the business. Okay, also not this answer. Paying in slip issued by bank to payee, which is the person who received the payment when money is deposited into the bank account. So you can see the keyword. Okay, deposit. So it's C is the answer. D, statement of account. It is sent to the customers detailing all recent transactions and show the total amount of outstanding. So this is usually issued by supplier to the customer. Okay, the purpose of it is to remind the customer to pay the amount owed and also allow the customer to cross-check the details with their own records. Okay. Question 4. A trader kept a petty cash book using the Impress system. How much was needed to restore the Impress on 1st April? So we need to find the closing balance, okay, because the timeline is from 1st April to 31st March. Okay, so let's calculate what's the Impress amount. Okay, Impress amount is the fixed amount that the petty cash book must have as a balance. So you can see 1st March petty cash balance is 80. So transfer from bank account to restore imprest. So in order to calculate the imprest amount, you need to use 80 plus 170. So in total, you will get 250 as your imprest amount. Okay, so when you get 250, right, and then you minus out the cash payment 195 and you plus the cash expense refunded, okay, because it adds into your account. So your closing balance is actually 65. However, this is not the final answer because they are asking you how much was needed to restore the imprest on 1st April. So you'll use 250 minus 65, then you will get 185. So that's all for this question. Okay, moving on to question 5. Sahil took goods from business for his own use. So this is drawings. These goods have had a cost of 60 and a selling price of 100. So when recording drawings, it's always on cost, remember, okay, which entry was made in the drawings accounts to record this withdrawal of goods. So this one, the double entry is debit drawings, credit purchases, okay, because your purchases reduce, so you credit it, okay, and then drawings increase, so debit. So the amount is 60 and 60, so the answer is this, debit drawings. So the answer is B. Question 6. What is an advantage of using a sales journal? So sales journal, the total is posted to the sales account, okay? So okay, A, it enables monthly totals to be posted to the sales ledger. So the first half is correct, but sales ledger is wrong. Because sales ledger records the individual's customer account, the correct answer should be sales account, not sales ledger. Okay, should be sales account. Okay, so B, it ensures that all credit sales are correctly recorded. No, this is under sales ledger control account. C, it reduces the number of entries in the sales account. Correct, because it posts the total to sales account, so it definitely reduces number of entries, so C is correct. And D, it shows the amount owed by credit customers at the month end. This is wrong. This is referring to the sales ledger control account. Question 7. The following account prepared in the ledger of Ellie and this Jacob account, which statement is correct? So Ellie is the business and Jacob is the customer, because we can see that there's sales, so Jacob definitely is customer. Okay, which statement is correct? On 1st June, Ellie was owed 220 by Jacob. Yes, this is correct because the double entry is debit trade receivable, and then you will credit Jacob account. So we can know that, you see, when trade receivable receipt increase, so this means that Jacob is still owing Ellie. So A is correct answer. Okay, question 8. The total of trial balance agreed, but it was found that purchase of office equipment had been debited to office expenses account. Which type of error has been made? So for this one is definitely the error of principal. So let me write down the entry so that, okay, so right now the entry is you purchase of office equipment, you debit to office expenses. Okay, but maybe you credit bank correctly. Well, this is correct, then we don't care. So in order to correct it, you need to credit office expense and debit office equipment. Okay, so this one is definitely the error of principle. Well, you can read, so here are the descriptions of the different errors. Commission is correct site, correct class, but wrong account. For example, you credit sales to Jane, but it wrongly debited into Jenny's account. And then the error of compensating is error on the debit side is cancelled off by an error of equal amount on credit side. Okay, for example, cash and sales account were both overstated by 100 because cash overstate is debit and sales account is credit side. So if both sides are overstated by 100, there's the overall effect is that there's no effect because you can't identify through the trial balance. Yeah. Okay, so C, original entry, wrong amount is entered in the prime entry book but posted to the correct account. Okay, so for example, prime entry book like sales journal, the total is like okay, this is A, customer B, 3, 5, but you accidentally recorded as maybe 80. Okay, and then you post this to the sales you post it to the sales ledger, sales account, okay, which is wrong. When this trial balance failed to agree, the difference of $620 was placed in the suspense account. The suspense account's balance was shown on the debit side of the trial balance. So we know that suspense account is used to substitute the shortage and it's on debit side. So it tells us that the shortage is on debit side. So first we open a suspense account. So we debit. So the because it's a debit balance, so you just write this first. Okay. So in order to balance this suspense account, we know that the correction should be on the credit side. Okay. Okay, so we need to find the error that requires a correction on credit side. Okay, so let's see the first one. Discount allowed of 310 had been credited to the discount received account. Okay, so let me write it here. Okay, so this is the original entry. Okay, so you didn't debit discount allowed. Instead, you credit discount received. So it's credit side. And usually we'll credit trade receivable. And usually we debit discount allowed, credit trade receivable. However, this time we did not. Instead, we go to this credit discount received. So this is wrong. This is correct. Okay, so let's see what's the correction. Okay, the correction is need to debit discount received. You need to debit discount allowed. Okay, you debit discount received to cancel the mistake, and you debit discount allowed to correct the mistake. Okay, and then suspense account is credit side. Okay, so 620. Oh, sorry, it's not this. The amount is 310. Okay. So as we can see, the first one is actually correct because just now we said that we want to find something that is credit side, right? And then this is credit on the suspense account. So we immediately know that the first option is correct. So if you want to check, you can do this kind of original entry and see the correction by yourself. But I'll just only do option A for you. Okay, question 10. Jane took cash drawings from the business. The amount was debited to the purchaser's account and credited to cash. How did this error affect the profit for the year and the current assets in the financial statement? Okay, so for cash drawing, right, the correct entry, it should be debit drawings and credit cash. Okay, but instead you go to debit to the purchaser's account. So from here we can know that you have overstated your purchases and you understate your drawings. Okay, so these are the two main errors. Okay, so the first error, you overstated your purchases. So what's the effect? So this will cause, and you will overstate your cost of sales and you will understate your gross profit. Okay, when you understate your gross profit, you will understate your profit for the year as well. Profit for the year. Okay, and let's see. Drawings. When you understate your drawings, right, you will understate your capital, but this is not relevant to the question, so we don't have to look at it. Okay, so yes, correct. The first one is decrease, and current assets, no effect. Yes. Okay, so A is correct answer. Question 11. What is true about a bank statement? So remember, a bank statement is actually a details of bank transactions received from bank. So first one, it is a demand by the bank for repayment of an overdraft. So this is clearly not a bank statement. Okay, it should not be a demand, it should be a payment or a receive. Okay, second, it shows a positive bank balance as debit balance. This is wrong, because if it's a positive bank balance, it should be credit balance. Okay, so how you can remember is that when you deposit money into your bank account, your bank actually owes you more money. So this means that at the bank's point of view, their liability increases. Okay, when money is deposited. Question 3, it shows transactions affecting the bank account in a given period. Yes, this is correct. Okay, so always remember this, understand this definition. Okay, so the answer is D. On 30th June, the bank column in Fart's cash book showed an overdrawn of 2,000. Following items had not been entered in the cash book. So what is the correct balance of bank column in the cash book at 1st July? So this one you need to draw a cash book. Okay, because it is an overdrawn, so it is, the balance is on credit side. Okay, so be aware of this. Balance is on credit side. Okay, and then first, standing order for rent. So standing order is a payment, so it's a credit side. So just write a short form, SO 200. And then interest on bank overdraft, it's also a payment, because your bank charge interest for your overdraft. So it's 50, credit 50, and then credit transfer from X Limited. So credit transfer is like your receiver, people deposit money into your bank account, right? So if you don't remember, you can see this from X Limited. So it means that maybe it's from your customer, so deposit into your bank account. So it's this. Okay, and then you just need to find the remaining balance. So total 2009, and then you can see what's the difference. Remaining balance CD is 650. Okay, so be aware, because they're asking you the corrected balance. When it asks about 1st July, means that they want the balance brought down, so it's debit 650. Okay, not credit 650. Question 13. What is an advantage of maintaining a purchases ledger control account? Okay, first, it detects errors of omission. No, error of omission is unable to be detected using normal ledgers. Okay, so it cannot be detected by trial balance or like any other control account. Okay. B, it guarantees the accuracy of the ledgers. Okay, here's the tricky part. It guarantees, is the word they use make it wrong? If it changed to like it checks, it provides an arithmetic check on the accuracy of a ledger, then it can be correct. But if guarantees, it's wrong. Okay, it does not guarantee. There can still be mistakes. It just provide a check. C, it prevents fraud. Again, this seems like tempting to choose, but it actually, they should use the word like it minimizes the fraud or it detect the frauds. Okay, but they can't prevent the fraud. Well, D, it shows how much is owed to suppliers. This is correct because it shows you like the balance BD, so you know how much you owe. So D is the correct answer. Okay, question 4. Raj is both a customer and a supplier to Barbier. So when you see this, immediately think of contra. Okay, So Babir is the business, okay, is our business owner. Okay, Raj account in Babir's sales ledger showed a debit balance of 300. Okay, so from here we know that Raj owes Babir 300. Okay, there was a credit balance of 100 on Raj account in Babir's purchases ledger. Okay, so Babir's owes $100 to Raj. So a contract entry between the two accounts was agreed. Which entry would Babir make in his purchases ledger control account? So remember, when contract and whenever you see contract entry, always set off using the lower amount. Okay, which entry would Babir make in his purchases ledger control account? So it should be, okay, the PLCA set off using lower amount, which is 100. Okay, so the contra should be, this is the balance, and the contra should be on the debit side, $100. So C is the correct answer. Question 15. A limited company sells office equipment. The following amounts were recorded in the company's books of account. What was the total of the capital receipts of the company? So selling office equipment is important because when you see office equipment, you know that this is their inventory, right? So don't mistakenly thought that this is the non-current asset, but instead it's their inventory. So capital receipt means the income received from non-trading activities. Okay, so let's see the first one. Cash received from disposal of motor vehicle. Yes. Okay, because this is the proceed received from selling from the disposal of non-current asset, which is capital receipt. Second, cash received from issue of shares. Yes. Okay, this is some form of capital. Okay, the owner introduced capital in the company. Yes, so this is correct. It's a capital receipt. Third, discount received, rent received, they're all not correct. They are recorded under other income in the income statement. Okay, so answer is add up 6,000 plus 9,000. So answer is C, 15,000. 16. On 1st January 2023, Kate paid a $400 off for a 2-year maintenance contract on her machinery starting on that date. In error, this amount was debited to the machinery account. Kate depreciates her machinery at a rate of 20% per annum. What effect did the error have on Kate's profit for the year ended 31st December 2023? Okay, so let's see first one. First, because she paid a 400 2-year. Okay, 2-year maintenance. This one is a key point. Okay, so if it's 1 year from 1st Jan to 31st December, this is 1 year. So the real maintenance expense that Kate incurred is $200. However, she did not record this as an expense. So as a result, the error is that she understated the expense by 200. So profit will be overstated by 200. Okay, first one. Second one. Okay, so because she recorded to the machinery account, this means that she has accounted for the depreciation. So she has overstated depreciation by 20%, which is 80. Because you take 400 times 20% is 80. This caused your expense to be overstated by 80 and profit understated by 80. So the overall effect, okay, look at this, and then you can see what's the overall effect on the profit for the year. Overstated by 120. So B is the answer. 19. Why should a business depreciate its non-current assets? So the question is asking you why, so it's the reason. There are only 2 concepts that you need to know, which is for depreciation. It's first one is matching concept. Okay, so it's like matching is to match the cost of depreciation against the revenue earned in the accounting period. And then second concept, it's prudence. Okay, prudence is to ensure profits and non-current assets are not overstated. Okay, so there are the two main concepts for the reason of depreciation. So let's see which one suits. First one, to charge the cost of an asset as an expense in the year of purchase. So this seems correct, okay, but it's just partially correct because it says that it charged the cost of an asset as an expense. Expense is correct, but it doesn't say that it doesn't say that it match with the revenue earned. And it's also not the cost of an asset, it's the cost of using a non-current asset. Okay, second, to ensure that cash is available to replace the non-current assets. Not this. Ensure the value of non-current assets is not understated. Okay. No. It should be to ensure the value of non-current assets not overstated, but it's not complete. The answer is not complete. D, to match capital expenditure against the revenue it has helped to earn. So this is the most correct one. It's referring to the matching concept. Okay, so D is the answer. Question 18. A trader had a credit balance on his heat and light account at the start of the financial year. What does this balance represent? So first one, you need to know the heat and light account, it's an expense. So when it's a credit balance on the expense account, we immediately know it's the current liability. So, okay, let's eliminate the option A and C first. So B is the correct answer. So this one, B is the correct answer. But if you want, I can draw the account for you for better visualization. Okay, so this balance, BD, this one is a current asset, which is prepaid expense. Then this one is accrued expense. Okay, so that's all. Question 19. Which statements about irrecoverable debts are correct? First one, they are an application of the historic cost principle. Not correct, because historic cost is the concept saying that you must record all the transactions at the date you acquire them or sell them. For example, you buy the non-current asset on 1st July 2023 at $10,000. Then you need to record it as $10,000. Okay, you cannot record it as the market value. Second, there are debts which will not be paid by credit customer. So this is correct because maybe the customer went bankrupt, so you know that it's not possible for you to collect it at all already. Third, they increase the value of current liabilities. No. Fourth, they reduce the total value of trade receivable. Correct, because this one you will minus out from in a statement of financial position. So you use this minus recoverable debts. Okay, so correct. Question 20. At the end of his financial year, Raminder made an adjustment for rent owed to him by a tenant. How did this affect Raminder's financial statements? So from here, we can know that this is a rent receivable to Raminder. And when we say it is owed to him by the tenant, this is an accrued rent receivable. So is accrued rent receivable a current asset or current liability? So you need to think in this way. Raminder already provided the place for the tenant, so the rent receivable already incurred, but the tenant hasn't paid him yet. So this means that it's a current asset because Raminder is waiting for the tenant to pay to him. Okay, so accrued rent receivable will include in our income statement. Hence, other income will increase. And when other income increase, your profit for the year also increase. Okay, and next, because rent receivable is a current asset, so you'll increase your current asset. So this is the effect of the adjustment. Okay, so D is the correct answer. Question 21. What is the disadvantage of operating as a sole trader? First, access to capital is restricted. Yes, correct, because you only have one owner, and then the amount invested is very limited. Whereas in partnership or limited companies, they have like multiple owners, right? And there are shareholders, so they can issue shares to raise more capital. So sole trader is more limited in terms of capital. This is correct. Second, bookkeeping records are more complex. No, it's rather simple. Third, decisions may take longer to implement. No, sole trader only has one owner, so they don't need to discuss with anyone else. Yeah, the decision will be faster. Fourth, the liability of the owner is limited. No, this one is unlimited. Okay, this means that if the owner cannot repay their business debt, they also need to sell off their personal assets in order to pay for the debts that they incur. Okay, so A is the correct answer. Question 22. John and Mark are in partnership. Profits and losses are shared in the ratio 3:2. So you can write in the fraction form. John is entitled to an annual salary of $12,000. The profit for the year ended 31st August 2023 was $52,000. How much would be credited to the partner's current account on 31st August 2023? Okay. So here, first you need to prepare an appropriation account so that you can work out the share of profit or loss. Okay. So let me just write here, appropriation account. Well, actually you don't have to label when doing MCQ because you want to save time, but right now I'll just do it for you. Okay, so first you will start with your profit for the year, 52,000. Okay, there's no interest on drawings. Okay, then continue. Less partner salary. So John, 12,000. Okay, so there are no other interest on capital. Okay, so this is the residual profit. Okay, you'll get 40. And then remember to do share of profit. Okay, a lot of people will forget to account for this. Share of profit. This is when you use the ratio. Okay, so 40 times 3/5 and 40 times 2/5. What would you get? 24 and 16. Okay, once you've done with this, you calculated your share of profit, then you can open up a current account. Okay, so first, usually we'll start with the balance, but here we don't know what's the balance, so let's just put a dash. Okay, next, share of profit. Oh no, let's account for the salary first. Partner salary, only John has it, it's 12,000, so we put 12. Okay, next, share of profit. You also credit 24 and 16. Okay, so what they want us to find is that they want to see how much is credited to the partner's account. So it's the balance BD. They want to find the balance BD. Okay, so let's total up here. Okay, so this is a balance CD. Total's here's 36, here's 16. Okay, 36, 16. So we find it here. Okay, what they want us is this balance BD. So this is the answer. Okay, let's see. Yep, so D is the correct answer. Okay, question 23. Which statement correctly describes the effect of limited liability if a business fails? So limited liability only applies to limited companies, private limited or public limited. Okay, it's all the same. First, a shareholder can only lose the money they agreed to pay for their shares. Yeah, this is correct. Okay, so they cannot be liable for the all the business debts, so they do not need to sell off their personal assets to pay for the business debts. B, a shareholder risks losing all their personal possessions. No, this is sole trader. Okay. C, a sole trader can only lose the capital they have invested. No, this one is for shareholder. Okay, so be aware of this. It's a bit tricky sometimes when you didn't look properly. Fourth, a sole trader risks losing all their personal possessions. Yeah, okay, this statement is correct, but it's talking about limited liability. This is talking about unlimited liability. So please look carefully. So A is the correct answer. Okay, 24. At the start of the year, V Limited had 45,750 total equity, of which 10,750 was the retained earnings, of which means within this for 45,750, 10,750 was the retained earnings. Okay, so don't extra count this because this is within this. Alright, okay. At the year end, the company had transferred 1,000 to general reserve. However, we know that this has no effect on equity. Okay, so because you will minus out from retained earning and plus back to general reserve, so the overall effect on total equity is 0. So none. Paid a dividend of 2,800 and made a profit for the year of 4,995. Okay, what was the total equity at the end of the year? Okay, so first we can draw a very simple S of FP abstract. Okay, so this is equity. Okay, so it gives you 45750. But the thing is, we don't know what is this in details, like whether this is like ordinary share capital or this is general reserve, right? So we can just write 35,000, I guess. Okay, why is it 35,000? Because you take this minus out this. Okay, so you just write retained earning. For this, we just write others. Okay, and then this is retained earning. We'll put here. Okay, but before that, we need to calculate. So retained earning. Let's take the opening balance, 10750. Okay, first we minus off 1,000 because this is transferred to general reserve. Paid a dividend, so you minus off. Then you made a profit, so you plus. In total, you will get 11945. Okay, because this is the closing balance, right? So you just post it to here, 11945. Remember, general reserve. Okay, because you transfer from retained earning to general reserve, you need to plus back the 1000. And then the question wants the total equity. So you just add up this, you'll get the answer, 47945. Okay, so C is the correct answer. Question 25. The treasurer of sports club provided the following information. What was the amount of the accumulated fund? So this one is similar to the capital concept, but it's only applicable to the clubs and society. As we know, the formula should be total assets minus total liabilities. So let's first identify. First one, clubhouse and sports fields is the non-current assets. Sports equipment, non-current asset. Cash and bank, current asset. Bank loan, non-current liability. Subscriptions accrued, because this is an income. So when there's an income accrued, it is a current asset. So let's just press everything and minus out this non-current liability. You'll get 330,800. So C is the correct answer. Okay, 26. What will be included in the receipts and payments account of a social club? So receipts and payment account is similar to the bank account, but it's for clubs and societies. First one, cash payment for new furniture for the clubhouse. Yes. So everything involving receipts and payment will be in this account. Second, depreciation charge. No, because depreciation is a non-cash expense, so it's definitely not recorded here. It's recorded in the income statement of the clubhouse. Okay, third, outstanding subscriptions from the previous years received in the current year. Receive is the keyword here. Okay, so we know that this is correct. Fourth, subscription owed by members at the end of the current year. No, this is the balance BD, balance CD, and balance BD. There's no receipts and payment involved. Okay, so it's not this. B is the answer. Tanto is a manufacturer. His manufacturing account for the year ended 31st December showed that his work in progress had increased. Okay, so this is year end, right? So immediately we know that this is closing work in progress. Okay, how did this affect the cost of production and the cost of sales? Okay, so first we need to look at the manufacturing account. Okay, let's do an abstract. Okay, so as we know that it's usually, we'll write this, opening work in progress. Okay, we'll less closing work in progress, and then we'll get cost of production. Okay, so when your closing work in progress increases, this means that you minus out more, so your cost of production actually reduce. If you're not sure, you can plug in random numbers. Maybe you can put 5, and then your closing work in progress increase, so it's 7, then you get -2. But today, if your closing work in progress is lower, maybe you say 4, then you will get 1. Okay, so but today our situation is this. Okay, so you can see that our cost of production is actually lower. Okay, and then done with the manufacturing account abstract, we can go to the income statement abstract. Okay, it's just an abstract, so you'll usually less sales, and then we get less cost of sales. Cost of production will usually put here. Okay, so when your cost of production reduces, your cost of sales will actually also reduce. Okay, so we can see A is the correct answer. Question 28. A factory makes uniforms for school children. What is not included in the calculation of prime cost in the factory's manufacturing account? So prime cost also means direct cost. So it's the cost that directly involved in the production, such as raw material costs, Okay, direct raw material, direct labor. Okay, direct expense. Okay, so let's see. Cost of the clothes used to make the uniforms. Yes, it is included. Because you need to find not included, right? Okay. B, delivery cost of bringing the cloth to the factory. Yes, it is included. C, wages of the drivers who deliver the completed uniforms. This is not. This usually will park under the income statement, okay, because it's a distribution cost of the final product. D, wages of the sewing machinists who make the uniforms. This is the direct labor. So we also include. So C is the answer. Okay, question 29. The average inventory of a business was 40,000. The rate of inventory turnover was 5 times a year. Markup was 20%. What was the revenue for the year? Okay, so this one we need to use, there's two formula. First one, we need to know the rate of inventory turnover is cost of sales divided by average inventory. Okay, this is the first formula we need to know. Second one is actually this. Gross profit equals to 20% times cost, and revenue is 120% times cost. Okay, this is the markup formula. So how do we derive on this? Okay, it's actually rather simple. Okay, so remember the income statement formula. Okay, use revenue, you'll minus cost of sales, and then you will get your gross profit. So when you see markup, right, immediately you need to know that your cost of sales is always 100%. Okay, and then your gross profit is 20%, right? So revenue is 120%. So if you want to get revenue, you use 120% times with your cost, and gross profit is 20% times with the cost. Okay, so this is essentially how I derive this formula. Okay. 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 So I'll just leave it here. Rate of inventory turnover, put in the value 5, cost of sales. And average inventory, 540,000. So our cost of sales is 200,000. Okay, so our revenue is using 120% times with the 200,000. Then we'll get 240,000. D is the answer. Sorry, so C is the answer. Question 30. Shirley does not maintain a full set of accounting records but was able to provide the following information. How much was owed by the trade receivable on 1st September 2022? So for this one, you need to draw accounting period. So from 1st Sem to 2022, 21st August 2023. So this question is asking you to find the opening balance. Okay. Opening balance. This question, you need to prepare a sales ledger control account. So you can draw out. Okay. Okay, this is the balance you need to find, opening balance. Okay, first one, sales for the year ended. They give you 97,500. But this one is the total sales. But we don't want that. We only want credit sales, which is 80%. So you just use 80% times with 97,500. And then you debit it here. You'll get 78,000. Okay. Second, amounts received from trade receivable during the year is 71,500. This is bank. So you credit sales ledger control account. Okay, done. Third one, amount owing by trade receivable on 31st August 2023 is 14,000. This one is your balance CD. So you just put in, total up the column, Then you use this total minus your 78,000. Then you get your opening balance. Okay, you'll get 7,500. B is the correct answer. Question 31. Wayne provided the following information. What was the return on capital employed? First, you need to know what's the formula. So it's ROCE equals to profit for the year divided by your capital employed times 100. So there are two formulas for capital employed you need to know. First one is total asset minus current liability. Second one is total equity plus with non-current liability. So you just plug in the value. Non-current, okay, so for profit for the year is 23,000. Capital employed. So let's see for this question what you have. Okay, so we will use the first formula for this question. Since we don't have the equity given, we have the total asset. So we just put in the value. 110 plus 25 minus 15. So final answer, you will get 19.17%. B is the correct answer. Question 32. The trade payables turnover of a business is 36 days. What do these 36 days represent? So the formula for trade payable turnover is trade payable divided by credit purchases times 365. Okay, actually, you don't have to know a formula for this question, but it's good to know. Okay, let's see the option. The average number of days before the business purchases further goods on credit. Okay, this is not correct. B, the average number of days taken by the business to pay its credit suppliers. Yes, correct. So, yeah, you can just, from this formula, you can know that this is the correct answer. So B is correct. Okay, question 33. Paul's gross margin increased from 16.5% in year 1 to 17.5% in year 2. What would explain the improvement in the gross margin? Okay, so before answering this question, there are a few reasons why a gross margin will increase. So I'll give you first. Okay, so first one is due to an increase in selling price. Second one is reduce in cost of purchase. For example, you'll get bulk purchase, you buy in bulk, and then you get a trade discount from your supplier. Okay, so reduce your cost of purchase. Third one can be due to a reduce in opening inventory. Fourth can be due to increase in closing inventory. So the effect of the 2, 3, 4 is that your cost of sales actually reduces and your gross profit increase. This is why your gross margin increase. Okay, so remember the gross margin formula is gross profit divided by sales times 100. So if you want this to increase, your gross profit should increase. Okay, so first, increasing the quantity of goods sold. No, this is not under this reason. First one, second, increasing the selling price of the goods sold. This is correct. C, offering trade discount to customer buying in bulk. No, we shouldn't be offering. If this option changes to receiving trade discount, then it can be correct. Okay, selling goods at a reduced price. No, this will reduce your gross margin. Okay, so B is the answer. Question 34. M Limited has made sure that its financial statements are comparable with those of the previous years. How does this affect interested parties? So this question is testing you about the 4 accounting objectives. So here are the 4 objectives. You can take a look at its descriptions. Okay, let's move on to the option. First one, they are made aware of any changes in the accounting policies. So for this one, the effect is that they can know what's the changes, and then this helps with the comparability. Okay, so this one is correct. Able to compare, so A is correct. Okay, so B, they can be sure that information in the financial statement is up to date. Okay, this is more of reliability, okay, or relevance. C, they can understand the financial statements easily. This one is understandability. D, they know that there are no significant errors in the financial statement. This is reliability. Okay, so I would say that this one is more of relevance. Okay, relevance, reliability, and understandability. Okay, so A is the answer. Okay, last question. Which accounting principle states that profit should be recognized when title to the goods passes to the customer? So this one is definitely realization. So there are a few accounting concepts that you need to go read by yourself, and you need to grasp the concept really clearly so that you can answer this theory question with more confidence. Here's the end of our video. Hope it helps you a lot. Please like, share, and subscribe to our channel. We'll see you in the next video.